Okay, last time in part one of Trading with Space, you heard about this idea of room to the left and what space is all about, if you're not familiar with that. Darren and I disagree about the usefulness of space on your charts. If you haven't heard episode 29, which is part one of Trading with Space, please go back and listen, because without an understanding of part one and our discussion there, part two here is not going to make much sense at all. So if you want to be able to follow along with part two, please go back and make sure that you do watch part one. So let's get started and jump back into Trading with Space. This is part two.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders podcast.
Yeah, that's exactly what I was sort of getting at, was that my instinct is to say that if you trade in the way that I trade, what happens is the blame kind of lies on you, right? Because you feel like you're the one in control. You're the one picking and choosing the spots to trade. Whereas if you trade in the style that you trade, it's more letting go, and it's more the blame has to do with the market. So I could see where someone who's trading your style would say, the reason why I've had this losing streak is because the market's changed, the market's done this, the market's not moving, the market's not, you know what I mean? Whereas if you trade the way that I trade, there is an ability to blame the market, but there's a tendency also to say, well, I'm the one that decided to go in here, so I'm the one to blame. I'm the one that took this losing trade, right? I don't really think that either of them are correct. I think that no matter how you trade, it really should be blamed on bad luck. You should just say, just like the casino does, when they lose a bunch of money on, Friday, they lose all this money. So it's not that our casino games have stopped working. It's not that the gamblers have figured out how to make money, from the casino. They're all games of chance that have the odds firmly stacked in our favor almost universally across the board. So there's no real reason to be upset. So I think, to me, I could see where someone trading your style would tend to blame the markets. And one thing that might come up, I don't know, Darren, one thing that might come up would be, oh no, the market's changed. It used to work. I've had 2 weeks in a row where I've lost money, and maybe the markets have changed and this strategy is not going to make money anymore. And of course, that's right before you have a really great week of profits. But, that's the thinking that comes in is, the markets have changed. How do I adapt to this changing market? Is that something that you hear?
Yeah, definitely. And I think, that is like with any style of trading, you can't underestimate the importance of practice and trial and error. And when you've done enough weeks of trading in a particular style, you'll notice that there's a randomness to how the good and the bad times are distributed. And at the same time, you have a sort of, let's talk about, if I'm trading on the H1 time frame intraday, I know now that the least likely thing to happen is to have 5 good days. And the other least likely thing is to have 5 bad days. Generally what happens is there's 2 bad days in every week, okay? And maybe 2 good days and one that's kind of, not so bad. The only thing that really varies is how they're distributed. So I might have a win, a lose, a win, a lose, and a win. Or I might have 2 losing days to start the week. But, I kind of know that that's kind of coming around the corner. So you kind of get better at dealing with it. It's kind of one of the reasons I really don't like using figures too much. Because, let's say, for instance, a really good setup for you, there will be some distribution on how well it works, and if you test it over a long period of time, you might say, okay, well, it's worked out 60% of the time, but it doesn't mean that the next 10 trades will have that kind of performance, and so it's an issue.
Absolutely, yeah. So when you do that, if you were to trade 1 week and you had 3 winning days in a row, would you just stop and not trade the last 2 days of the week? Or
this is a big question at the moment. That this is kind of the only thing that I'm thinking about in trading at the moment, and I've been looking at this a lot. And again, it's something that people tell you shouldn't do, which is what instantly spikes my attention, thinking I might be onto something quite good here. because if everyone thinks it's a bad idea, in my experience, it might be quite good. And I can't really say one way or the other whether it's better or worse to do that. I do notice that even on the weeks where I end up losing, there's usually one or two occasions where I could have got out over my target for the week. So I have a kind of rough target of, say, 150 pips for the week. And there's nearly always, on my losing weeks, an opportunity to do that. Of course, the argument is that you're going to pull down your very big winning weeks, but those are pretty few and far between. Most of my winning weeks are around about the same ballpark figure. It's great because you could trade Monday and Tuesday and have the rest of the week off. And even when you're trading consistently, it is really tiring. I'm exhausted when I get to Friday. I'm mentally drained, and I find it hard work doing this, even though it's ingrained in me now. I even looked at daily trading from the start of the month on the daily time frame and having a target of 250 pips on a pair, and you can go months on end without basically trade until you're a positive 250. I can go months and months on end without a losing month. And then, if you had like the odd month that was 2,000 pips lost, then, obviously that would balance it out. But I don't really find that happening. So I think possibly with my style of trading, it could work. I'm not sure it would work for your approach, though.
Right. So when you say that the big winners are few and far between, that's not really that surprising, right? Like, because we know, for example, the trend following traders, they typically will see a handful of trades make all of their profit for the year, really. So this is interesting. So do you think that if you change the way you exit out of your trades, for example, like if you were to change your exit strategy so that you didn't necessarily have a target each week, but rather it was more along the lines of a trailing exit, and I don't know, maybe you do something like that. But would that, that would probably reduce your win rate, but I wonder if that would lead to greater overall profits, even if they are less consistent. In other words, you might have more losing weeks, right? But at the end of the year, you have a whole lot more profit just because you have a few, like you say, a handful of these winners that you've really milked. Or is that something that some traders are doing? I see a lot of traders approaching the exit in a different way. They kind of all work. I've got there's a few traders that I speak to on a daily basis that just aim for sort of 50 pips or something each day, and they do really well, and they do really consistently well, and so they use a much tighter trailing stop, and they have obviously have a higher win rate, and the only difference will be their losing days will be comparatively larger compared to their wins than perhaps letting your trades run. So even with the exit, I don't think it's one thing works, and I think again it's something where we're kind of told a particular way to trade, and we kind of have to feel that we have to stay within those bounds. When I look at variations in that, I just find that those rules are not true. Give me some examples, because I don't know. Like I understand what you're saying. Like we were told certain things. Like I guess if I had to guess, and I said, what are the things that you read in every trading book? Well, I suppose there'd be some things like always risk X%, whether that's 1 or 2%. That would be one thing. Another one would be always let your winners run, and another one would be something like you've got to trade with a high reward to risk ratio. Those would be if I had to choose three things that I would say we're always told. That's what I would guess. Is that kind of what you're talking about when you say we're told certain things?
Yeah, because I think basically that's all information that was working for that particular trader, rather than it being, this is how markets work, and if you don't do this, then the market is going to be against you, and you're definitely going to lose. I think those have been taken on board, and again, I'm not saying that they don't work and they're not excellent techniques to use, but they're not the only way. For an example, an inverse risk to reward. okay, there is a general sort of feeling that that is not a successful way to trade. You know, again, I think it's complete rubbish. I mean, you can have a much wider stop than your profit target and still make profit. You know, it's things like that. Any of those rules, I think, question them and look at the polar opposite and, you know, see if it holds true. I've got one trader that trades with me that I've known for years, and I showed him an inverse risk to reward strategy. Admittedly, he's gone on a little bit from it and made it his own, and he's added some elements where he still does get into some larger wins as well. But essentially, I said to him, take a daily bar, okay, and whichever extreme breaks out first, you take a sell or a buy. Obviously, a buy if you break out the high, a sell if you break out the low. If the day closes in profit, then you close your trade. Okay, so often you'll be, you know, on a daily bar on the pound dollar, you'll be risking, say, 100 pips and taking 30 pips profit. Obviously, there'll be big days as well. And, you know, he went on to make that into a really consistent way of trading. But people's instant reaction to that, I mean, I shared the idea with a lot of people, and he was the only one who took it up. You know, and he's kind of gone on from that now, and if there's some profit at the end of the day, he might move his stop up now and let it go for another day. But, you know, you'll never find anything in a trading book suggesting something like that, because it kind of goes against all of those rules.
Yeah. Yeah, that's funny. That's funny. But, you know, it reminds me of, like, when you talk about, like, entrepreneurs and things like that, you hear these stories about, you know, so-and-so went in and bought up all this land when it was worthless land or whatever. And it's kind of the same thing. Like, he's being rewarded for doing something that nobody else really thinks is viable or even a good idea. And that's where he's pulling his reward from. And it's a good lesson. Like, you think of, I think Warren Buffett essentially bought Goldman Sachs at the low of the GFC. And so everyone just thought, you know, this is a worthless company, and all these financial companies are worthless. And he went in and bought it, basically, because it was the absolute best time to buy it, because nobody wanted to touch those things. And that's sort of what your training buddy's doing, is he's taking a strategy that you've shared with all these people. Nobody wants to trade it except he will. He'll do it. And so he's being rewarded for that. And I think there's a good lesson in that.
Yeah, it's like the Big Short. You've seen The Big Short, haven't you?
Yeah, have you seen it now?
Yeah. Excellent movie. And when he first goes into, I don't know what bank it was, Deutsche Bank it might have been, I'm not sure, and says, I want to short the housing market, they all laughed at him, you know. And so there's kind of a message in that. If if everyone thinks your idea is crazy, then doesn't necessarily mean it's not a brilliant idea. Absolutely.
That's you know what, Darren, that keeps me sane, because people are every day people look at me like I'm crazy. It's one of those things where you say, like, wait a minute, hold on. So it's a no-brainer to invest heavily in the Australian housing market now. Okay, I'm going to short the banks. You know, because all this mortgage debt's flying around, you know. Yeah, it's interesting, but there's a lesson there, isn't there? Where, you know, if everyone thinks you've got this harebrained idea that's not going to work out, and that, like, who would do that? Usually you're onto something.
Can I ask you another question about your style of trading with reversals?
Sure.
So you have your way of grading your setups, your reversals. Does it make any difference to you whether it's support acting as support again, or it's support now acting as reverse, as resistance? Is one better than the other, is what I'm trying to say?
No. It doesn't really matter. In fact, I generally won't even take a breakout trade unless it comes back to confirm that level, right? So, for example, like if the market's going up, and it hits a resistance level, and then it finally hits it 3, 4, 5 times, it finally gets through on the fifth go, and it breaks through that resistance level, I still won't take the trade unless it comes back and bounces off that resistance level as support. So it doesn't really matter if it flips and goes the other way. It doesn't matter to me, no.
Do you like it to take a bit of time to come back? Because when I tried trading that way, I always found myself racing into it, and I went, okay, it's come back now, when it hadn't come back, and I just, it had broken out, and I kind of wanted to get into it because I could see it moving away, and I was like, well, I should be in this trade. So do you kind of have a criteria for letting it move away first?
Yeah, I generally like to see that, but I do have, because what you're talking about is something that I think a lot of traders come up against. So there's a strategy. There's a strategy called the Acapulco trade, where essentially it's a breakout and a retouch that happens really quickly. And so that's one. If you want to trade that way, that's fine. That's one way to fit your view of the market into that type of setup. But the other way to do it is what I think one of our members calls the pinch. Dennis calls the pinch. And that's where it breaks through that level, and then it takes a while to come back. And I actually prefer that one, but I will take an Acapulco if it looks like it's a market that has a lot of momentum and it's just really moving, and the candles aren't slowing down. Sometimes you feel like you're going to miss out. So I guess you can have it both ways. If you want to get in with that quick retouch, which is basically just a retouch on a lower time frame, you could trade it as an Acapulco. But if you want to stick to the higher time frame, then you just have to wait. And sometimes it doesn't happen. Sometimes it'll go without you, and it doesn't happen. But to me, it's, in my mind, the way I see it, it's safer to wait for the retouch. So I just wait it out.
So basically, the space strategy on the forum is they're basically looking for a reversal that's in some space, and then combining it with some price action. Then is that what they're doing?
Yeah. So I think Revo on there, he's talking about it, and he's basically looking at the lower time frame. He's looking at the 15-minute charts. Yeah, so he's basically doing that. He's got all of his numbers, and you can see his testing and stuff like that on there. I mean, to me, the whole idea of space, just to sort of wrap this up, is that you're seeing on the chart a spot where the market hasn't been in a long time. And coupled with that, this is a spot on the chart where we believe the market tends to bounce off of this area, right? It tends to find support here. It tends to find resistance here. It hasn't been here in a long, long time. So the fact that it's gone to this spot, and the fact that it's started to turn around, giving us some sort of reversal on the candlestick pattern, maybe it's a good spot to get into a reversal. And it may not work out. It may only go back for a little ways before it continues on in the trend. And so it's just going to depend on you, how you adjust your trade. Do you move to break even? Do you let it just stop you out? All those things are going to affect how you do with the worst case scenario, which is, a situation where it looks like it's a reversal. It reverses for a little bit, and then it keeps going and blasts through your original spot. So those are always going to be the worst case scenarios. But yeah, so that's how I view it. It's just more of a it's more of a time thing, I guess. You know what I mean? That's what space identifies for me. Because if you're looking at candles that are not tick candles, and you're looking at time-based candles, if you've got space in the chart, it's just telling you one thing, which is, look, we haven't been here in a long time. We haven't been here in a long time. We tend to reverse here, and we're printing this pattern that says reversal, that sort of thing. So those are all the pieces that I use when I take those reversal trades. Yeah. Okay, so Darren, let's wrap this up. So for you, when you're trading your reversals, the basic idea here is to take them all. That you never know which ones are going to work out, but you want to make sure you've got money on them, so when they do work out, you profit. And that it's okay to have some losing days, because eventually the market's gonna go, right? It's gonna go, and it's gonna give you some profit. And the exits aren't really that important. Some people are going to make a little bit more money than other people certain weeks, and vice versa on other weeks. Depends on how aggressive they are with their targets, or the way that they manage their exits. And so, yeah, so essentially you're leaving a lot. You're letting go, really, is the way I would describe it. The way that you trade this way, you let go when you're trading this system. You let the market sort of decide.
I think I had to do that. I think it was something I had to do. And, I came up with a technique to allow me to do that. And also, I can't bloody wait for those levels, mate. I just, by the time it gets there, I've made 5 mistakes already. So that's why I couldn't, I haven't got the patience that you have.
That's funny. All right, Darren, we'll see you next time. Thanks for your time. We'll see you next time.
Okay, cheerio, Walter.